Everybody, good morning. Still got the at names. Awesome. My favorite. Sorry about starting a minute late or 5 minutes late. I'm trying to get everything going the same direction. For whatever reason, I guess I left one of my Discord windows up with the roles channel up and it marked everybody as red. And I was popping through. I was like, oh, dang. There's a bunch of people who didn't get what they requested since yesterday afternoon. So I went through and popped on people with their permissions. And then I was like, oh, dang, now I'm late. One thing after another. But hey, c'est la vie, such as life. Anyway, the liquidity problem cranked up in the market right now. Interesting. It's very interesting. We saw a big repo hit last night. Now, a lot of times there'll be a repo hit. This is reverse repo. There'll be a reverse repo hit at the end of the month, especially at the end of the quarter when there's like jockeying and going through, and banks have to provide this liquidity, and they've got to be able to make all the numbers work, and they hit the repos, and this happens quite often at the end of the month. But yesterday was not the end of the month; it was the beginning of the month, and we had the second largest repo hit since COVID. I thought that was interesting. But there's all sorts of cracks. All right. Welcome back to the show. Let's do a poll here really quickly. Start a poll. There you go. Start a poll. Are you new here or you've been around for a while? Long time listener? First time caller? Anyway. So, we've been all spending months kind of looking at all this stuff going on. You know the feeling when you finish a crash diet or you try to, wrap up doing a diet or you give up on a diet. You just spent months convincing yourself that something healthy tastes like potato chips, but you had sworn off all the good stuff. You watch the numbers on the scale, maybe slowly tick down, maybe not, maybe just kind of edge off a little bit. You wish you go faster, and then you decide you're done, right? Diet's over. You step off the scale, take a deep breath, and immediately you hear something gurgling, right? Oh man. You're so focused on trying to lose weight, so focused on the scale, you forgot to check everything else, right? All right. That's basically what's happened in the financial markets. As of December 1st, the Federal Reserve's big scary diet, that QT, quantitative tightening, officially, they put the kibosh on that. It's done. Finito. They're putting down their kale smoothies. Done with the diet. For the last couple of years, the Fed's been trying to undo the absolute bonanza of money printing it unleashed during the pandemic over 5 years ago, almost 6 years ago now. It's crazy. I mean, do you remember quantitative easing? It was a long time ago. That's back when money fell from the sky. Every stock, every crypto coin, every used car went to the moon. QT was the hangover cure, right? That's kind of where we've been. Funny enough, stocks go up more during tightening cycles than they do during easing cycles. It's just facts. It was the Fed's bloodletting, if you will, of their massive pile of bonds. They were just letting the bonds roll off. Right? They bought the bonds and they were just letting them roll off. So now what? Right? Money went from falling from the sky, and then we were sucking trillions of dollars back out of the system. But it was slow. It was supposed to be painful. It was supposed to curb inflation. And now they're telling us, done. Mission accomplished. We're finished. But just as the Fed's kind of taking its victory lap, we're hearing noises coming from the basement of the financial markets. We're hearing sounds that coming from a place that people never heard of. Arguably, the most important plumbing system in the world. That's the repo market, where I started out. Now, stay with me a minute. The repo market sounds complicated. It's like most of us only know of repossessions, like your neighbor's car got repossessed, right? Repo. But that's not what this is. It's a giant glorified pawn shop, essentially, for big dogs. Banks, giant banks. Think of it this way. Every night, giant financial institutions, banks, hedge funds, they've got to settle the books. The debits got to equal the credits. Everything has to work out. But sometimes they don't. Sometimes they're short. All right? Some of these banks, some of these big fellas have a ton of cash. Some have a ton of assets, like treasury bonds, right? But treasury bonds aren't necessarily liquid. The repo market is where a ton of cash and ton of treasury bonds, they kind of meet in the middle. The guys with the bonds can actually go to the repo market, the pawn shop, and pawn their bonds overnight to have cash. They get cash. Settle the books. And they can get that from the people that have too much of it. The interest rate on these loans is the repo rate. They call it the overnight repo. It's like a pawn shop that you just go one night, and then you get your asset back the next day. You get your cash, you pay back the cash. It's supposed to be a super stable, super boring, hovering, stable, hovers right where the Fed wants it. But lately, the last few weeks, this thing hasn't been that boring. The pipes have been rattling. Last night, we saw a huge spike in demand. And this is where the Fed's emergency window for this market starts coming into play. The standing repo facility, on the day the QT ended, the banks borrowed $26 billion overnight last night. That's not exactly the sign of a healthy, well-lubricated, everything's fine kind of system. This is a kind of sign that there is stress, high stress in the system. The plumbing is making weird noises from the repo market. Liquidity is not what it should be. And here's the punchline. The beautiful, sarcastic cherry on top of this whole financial sundae of ice cream, the Fed, in its infinite wisdom, is ending its diet not because it hit the goal weight, but because the patient started to look a little not so rosy, a little bit gray in the lips. They're stopping the drain of liquidity because the system is already showing signs of a clog. They're basically saying, we're done tightening, but we also kind of need to start some untightening soon because the liquidity problems are showing up. Goldman Sachs already predicting that by January, the Fed's going to start what they call reserve management purchases. Sounds fancy, right? But don't let that jargon fool you. It's a fancy term for buying bonds again. Essentially QE, but not QE. More like QE light. That's quantitative easing light. A maintenance dose of money printing to keep the pipes from bursting. You got to keep the flow going. So here's the story and where it matters for us. The savvy traders and investors, it's a story of reallocation. The Fed has a big problem on its hands. It still owns $2 trillion in mortgage-backed securities, MBS for short. Those are bonds that are tied to people's home loans, like real deal. People have home loans and they get packaged up into these mortgage-backed securities, and then the Fed buys them out from the banks. So, as part of its new plan, the Fed is going to let these mortgage-backed securities expire, and instead of buying more, they're going to take that cash and buy treasury bills. short-term government debt. But I also hear they're going to buy AI bonds. That's the rumor. I've been seeing this more and more, that they buy these overnight AI bonds to provide liquidity in the system. So think about what all this does. On one hand, you have massive new seller in the mortgage market, $2 trillion of mortgage-backed securities that someone other than the Fed is going to have to be buying. So who's going to buy it? What price? This could put some serious upward pressure on mortgages. Just at a time when we're trying to cut rates to bring down mortgages. If the Fed stops putting a, kind of a cap on the mortgage rates by buying the mortgage-backed securities, guess what banks want? They want higher interest rates. So this is a quandary right here. The Fed's talking about cutting interest rates next week. And what's going to happen as we go into next year? This is not exactly great news for the housing market. If you're a home builder looking at this, maybe you should have a nervous twitch going on. On the other hand, the Fed is about to become the whale of the Treasury bill market. They're planning to soak up nearly $500 billion in T-bills early next year. When you have a buyer that big, who prints its own money, it tends to push prices up and yields down. It's interesting, right? The Treasury auction works different than most people think. The bigger the buyer you have, the lower the rates go. Lower rates is good for everything, right? It's good for government debt anyway. It's kind of a massive tailwind for anything short duration. So let's break down some opportunities here. This isn't any kind of advice, of course, but let's connect the dots a little bit. First, we have the obvious risk assets. The end of QT is historically a green light for stocks, at least in the short term. More liquidity sloshing around has to go somewhere. It often finds its way to the equity markets. Sectors that got hammered during rising rates could see a nice rebound. I mean, we've seen real estate investment trusts kind of suffering for a while, which are basically the landlords of everything from shopping malls to data centers. They love lower long-term rates. Also, look at the consumer discretionary stocks, the companies that sell you stuff you want to buy but not necessarily need. If liquidity is improving, people feel richer. Sometimes. If it all works out. Now, second, the Treasury trade. The Fed is telling you that it's going to be buying, it's going to be a huge buyer of Treasury bills, T-bills. This could make short-term government debt a very crowded but potentially very profitable trade. It also suggests that a steeper yield curve where long-term bonds have higher yields than short-term bonds. Well, there's ETFs that let you bet on exactly that. So looking at those ETFs might be interesting. You might have to Google ETFs that take advantage of a steeper yield curve on Treasury bonds. Third, the housing market paradox. While higher mortgage rates could be a headwind for home builders, the mortgage-backed securities themselves and that market could get interesting. For bonds, bond investors in that mortgage-backed security space, if you can stomach the risk, there might be opportunity to buy up some of these mortgage-backed securities at a discount as the Fed steps away from the table. It's kind of a contrarian play, but there's opportunity. And finally, the wild card in all of this, stablecoins. Now, the article I kind of looked at mentioned the Genius Act, which I talked about quite a bit, and I have a video on. That brought some clarity to the crypto market. Stablecoins are backed by real-world assets, and by the Genius Act, that requires it to mostly be Treasury bills. As the stablecoin market keeps getting bigger, it creates another massive source of demand where the very T-bills that the Fed is buying are also the thing that stablecoins have to buy. It's a fascinating collusion of traditional finance with the new digital world. Do those two buyers in conjunction push Treasury yields lower and Let the government have lower rates on their debt? So to sum it all up, the Fed's diets with their balance sheet, it's done. They're patting themselves on the back. Job well done. Done. A+. While simultaneously getting the emergency plumbing tools ready. Don't look behind the curtains. They're about to perform a giant magic trick, swapping $2 trillion of mortgage debt for $2 trillion of government IOUs. This is a moment of transition, and transitions create volatility. And for traders, that creates potential opportunity. So watch out. I'll try to keep abreast of where the opportunities might lie as this unfolds. So hopefully that's helped you understand a little bit about what's going on. I know it's kind of above most of our want to understand it levels, but hey, let's say Bell QC, thanks for becoming a channel supporter. I do appreciate it. My family appreciates it. And pop here. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. That's kind of the way this works. And if you want somebody to tell you what to do, there's people you can hire, but be careful. You know, most people out there are just trying to make some of your money and some of their money. And nobody's looking out for number one, but number one. Number one. And nobody's looking out for you like you. Nobody's watching out for your account. I don't care how much you pay them. Nobody cares more about your money than you do. And if you don't care about it, if you think somebody else is going to take care of it, you can just send it over to me. You can just hit that $ button under the video and just give me some money. I mean, I'll take care of it for you. Anyway, Cyber Monday sale. Looks like you got a few hours left. Up to 80% off. If you want to do that deal on TradingView, there you go. How do we make money today? Good question. Where did we get to yesterday? It was a little bit of a flush, but nothing unexpected. Didn't go deep as we needed to for a correction, so we've still got the upside target right here from the high. A few days ago, 6,900. That was the high back here on the 12th, 13th of November. Need to get above that high. And then, we have the high from the 29th of October, 29th, 30th. But we may experience some pullback right here. This is what I expect. I expect a negative reaction off the 6,900. If we can pop up there today, we may get a negative reaction into the FOMC meeting next week. And this may be a slower grind up here for the next few days. And we end up on right up there on the 10th. If that is the case, the FOMC meeting may result in a pullback. Right there. It may. So it looks like we have a lot of people that's been around for a while. If you're brand new here, become a channel subscriber. Hit the button. You can chat on the stream, talk to us. I do a evening show on Tuesdays, 5 p.m. Eastern, a request show where you can bring whatever ticker you want, ask me whatever question you want. And for about an hour, from 5 o'clock to 6 o'clock, we've been taking everybody's requests. And then at 6 o'clock, we switch over to a member-only stream, and it turns into more of an Ask Me Anything. So if you want to be in on that, be a channel member, hit the button, join the channel. It's relatively affordable. I try to provide maximum value. Anyway, always open to suggestions. If you got another idea for content you want as a member, hit me up. Let me know. So that's kind of what I expect. Some sort of bigger pullback off this level. Possibly back down here. Another 200 points, 300 points down. Then we make our final run. Yeah, the rhetoric may be that Santa Claus is not coming to town, and then we get the Santa rally into the end of the year. Maybe. So my big bold prediction this year was below 4 before we get above 7, but this might push us above 7. Might push us above 7. I might be wrong. Holy cow. I don't have a crystal ball. I do have a bag of unicorn dust that I sprinkle on the market, but it's cheap. It's affordable. You can go get your own if you want to. Just type it in the Google machine. Let's Google it up. Friction Labs unicorn dust. It's pretty great stuff. It's fun to have a bag of it on your desk anyway. Let's start another poll. See what y'all think. Can we have SPX above 7,000 before end of year 2025? See what y'all think. Yes or no? It's an anonymous poll. I don't know how you vote. I can't see, so make your guess. More participation, the better. And that was ES. So S&P 500. That's what that is. Look at the futures, and you may be new here, and you're like, "What the devil?" See, when you look at the cash index here, SPX, what most people would look at, you get these gaps. You get lots of gaps. Big gaps all over the place. And that provides missing information. You'd be like, well, you just go down to lower time frames, but there's no lower time frames that fill in those gaps. So what do? How do you fill in the gaps? How do you figure out that information? You don't go to a derivative like SPY. No. You go to the futures market that trades 23 hours a day, 6 days a week. And all of a sudden the gaps are filled in. So that's why I use the futures chart. And commonly on most trading platforms, it would be /ES. Like if you're on Thinkorswim or Tasty Trade or anything like that, even E-Trade, it's like /ES, and that's how you would get this. But on TradingView, it's ES1 exclamation point. And that's how you get it right there. Right, that's the constant contract. So they automatically roll over. When we look at the daily, you get these occasional rollovers where we switch contracts. If you want to go see the specific contract, then you type in, like, you have to know the codes for the specific contract, like ESZ. ES is the futures contract. Z is the month of expiration, because futures contracts expire. 2025 is the year of expiration. And then we can see the current contract. Now, this expires in December, which is coming up pretty quickly. This contract rollover is coming up right here. So when we look at this one, we've got that rollover coming up right here on the 16th. That means we're going to switch to the March contract, ESH 2026. That'll be the current contract after the 16th. So we got another 14 days, 2 weeks on this contract. Futures are a little bit different than everything else. It's like, are they like options? Not really. But there is an interesting phenomenon where when you get that rollover, turn this off log mode, there's a high difference, at least right now, there's a high difference between futures and the cash index. And that bleeds off as we get to expiration day. So we got 2 weeks left, and we got about 4 points difference between them. So right now they're pretty much in line price-wise. But once we get to the rollover, this will shoot back up here somewhere, and it's not always the same. These concepts where it gets higher, and back here, sometimes it goes lower. Like back here, had a period where it would go lower than the current price and then come back up. So this difference between futures and cash, they call it backwardation and contango. You can Google it. But that's why when you see ETFs that play in futures, specifically ones like this one, they tend to go towards zero over and over and do reverse splits because they have that backwardation in contango. But they always have to eat the costs as they roll over. There's also ones like UNG. This is natural gas. It eats that backwardation contango all the time. So there's some interesting stuff that goes on in the markets. You can take advantage of it if you know how, but if you don't, just be aware that it's out there. So moving on. That's why I use futures. NQ managed to get the close above yesterday. This could set us up for more upside. This one's a little more clear than the S&P 500. This is NASDAQ. All right, NDX is the cash index for it. That did almost a perfect ABC correction. Absolutely beautiful correction, right to the exact proportions that I would expect. This supports continuation. This is a trend pullback continuation scenario. I like it. We do have that FOMC meeting coming up on the 10th to be cautious of. That could provide us with a pullback before we get the continuation. We didn't actually hit the daily roadmap line, but we did hit the 4-hour. We went way through it. So this has a nice proportion. We are getting above that 618 level. That does activate the upside target. 26.7, 1850 on the futures. Maybe like, well, how can you play something like that? Easy peasy, lemon squeezy. Come to a derivative like QQQ. There's the entry. Right up here will be the target. 644.54. Now, remember, this can take another trip down. If you're playing short-term options, you can get caught for a little while. You got to make sure you have enough time. How much time? When these activate, the average is 45 candles. Standard deviation is 35. 3 standard deviations. Add it all up, that's 150 candles. And that represents the 99th percentile right there. So 99% of the time you won't run out of money or won't run out of time on that, but 1% of the time you will. So how far out here does 150 candles put us? 134, 146, 150. Puts us out into March. So this thing could screw around until March before it finally hits it. That covers the 99% of the time you won't run out of time. QQQ is probably pretty expensive to play till March on such a relatively small move. So you got to be careful. There's ways you could play, like doing a debit spread, but then the debit spread usually doesn't pay unless you're right on time. Like if it gets there soon, you make like way less money than if you got it right on the time. It's trade-offs. If you play shorter, there's a chance you might run out of time. So be careful out there. Russell, this one's got more of a sure bet here. We have a confluence of targets right up here at 26. We've been talking about that for a little while, and I like it. We did bounce off the daily roadmap line. And as I talked about when we got above the 618 on the daily chart, way back over here, all the way back in June, we're on a path to go to 2600. 75% likely that we're going to hit this 2600. 75%. Right up in here. We came up really close. Pulled back to the daily. That actually sets us up a little bit higher. We might even get to 2680. So, high probability. I did a spread out to January on IWM. That's how you play Russell. I played it looking for the bounce right back here. Grabbed a 250, 260. Looking for that to come on up. 250 call, 260 call. Bought the 250, sold the 260. Oil, looking for this to break on down, hit the target that we've been talking about for 2 years. Come on down here, low 50s, high 40s. Wrap this baby up. This is a big correction, what we've had going. No other chart shows the Fed liquidity suck more than this chart right here. This chart shows quantitative tightening all the way down. Do we get a final spike? Finish this baby up. And then off to the races. That's what I would expect. GC. And be very, very careful here. There is potential that that was it. Right there. There's potential that that was it. And we might start this downside for the bigger A, B, C. Right there. That right there. I'm very cautious being long gold right now because of this pattern right here. This is a bearish pattern for continuation lower. That target right now, right down here, 36 to 3,700. If you have patience and the discipline to wait for that, you could be rewarded handsomely if we get the bounce there. If you try to catch all the little moves in between, you're probably going to lose some money. Bitcoin, so far so good. So far, yesterday did what we needed it to do. Let's clean this up a little bit. I drew lots of stuff on here. Let's talk about where we're at. Where we're at. Pretty sure I deleted that off there yesterday, but okay. Save. See if it'll save. Here's the low. Here's the high. That's the first move up. That was the retrace. Held the 618. Exactly what we needed to do. Next move needs to break above the 618 of this pullback from this high to this low. That low right there. And once we do that, it's game on for the bigger test. We're at least bullish in the short term. Now, this will be the minimum target. Now, it can come up short. The market can always do whatever it wants to do. It doesn't have to do anything. Once we break above the 618, here's the minimum target, 96. 99, that becomes a toss-up. All right, coin toss if we get to that level. If we get to 104, break out the bull, baby. Sunglasses. So, sunny days potentially here if we can get above this level. So this is our bullish target right up here. If we can get that, baby, or something higher. We're looking at sunshines and rainbows. We can get all the way up there, make a pullback, we can go to all-time high. That'd be the good thing. Check plus, plus. If we break down below this low we just made yesterday, crypto winter's coming. 10 months of crap. It's probably what we're dealing with. It's that simple right now in Bitcoin. That simple. So, if we can break higher, first confirmation we're going higher is right above us at 89.5. Right here. If we get above that, probably coming up here at a minimum, 96. You take that to the bank, really. Would you buy now? That's risky. Hadn't confirmed anything. 75% likely. We're going on up though. Once we get above the 618. 94 would be the minimum, really. The minimum. 94, the minimum target. And if we start struggling right there, I'd be very cautious about getting off at 96. This is the move that's probably 75% guaranteed. We'll see what happens. ETH also managed to save the 618. As long as we stay above that low from yesterday. Sunshine and rainbows. If we break below the low from yesterday, probably crypto winner. Pretty much that simple right now for the next day or so. Once we get more information, we can make a better informed path forward. NKD still grinding under here. Same deal. Once we get above the 618, game on. Probably going new all-time high on NKD, 53,000. This is a global liquidity indicator. The reason I had this warning light up here, look how much chop we've had. We got to a warning zone. Now, we could break out and go higher, but more of this could just happen if we don't break above the 618. Just get more of this chop and more frustrating price action in high-risk assets like Bitcoin, Ethereum, S&P 500. Dollar managed to make a croquet hammer yesterday. It's interesting, but did we just soften it up? So we held on to the neckline by the close. We break down below it, probably coming down. We get below 98.5. We're probably going back down to the low for the year, down below the September low on the dollar. So this could, if we break on back down below 98.5, we could push the dollar on down for the rest of the year. Maybe into 2026. Again, if we break above this price action up here, we're probably going on up to 102. And if we can get above 102, starts the dollar squeeze for the short dollar trade. Apple dumpling, crack-a-lackin', hitting the target today, 284. Next upside is going to be 315, but we may need a correction back down to test the breakout, similar to what we did on Microsoft and Meta and others before we can go on up. Amazon, so far so good, under resistance. Got to clear this to look for more upside. Otherwise, we can get another leg down. That can be pretty vicious. Google, sitting here. Yeah, we poked above the target. Dang. 337 next upside. Meta. Potential bounce in place. Watch for a 618 retrace that holds. Similar to Bitcoin and Ethereum. If we do that, probably confirming the bigger upside potential. That target way up here. This will be a long-term trade. METU shares are a way to play that. Microsoft still hasn't confirmed we can get back. Still hasn't confirmed this is the bottom yet. Was that good enough on the downside? We're sitting here at resistance. Haven't been able to push through for, this is the third day now, fourth day now. 1, 2, 3, 4. Just kind of churning right here. I did close my shorts when we were down here and sitting here waiting for the next move. I may not play the next move, but if we can get back above, let's just draw some. We did come up shy of that 565 area, so that would be the upside target right now. The confirmation that we're going to do it, though, is all the way up here at 520. So we got to get above that to go on up to that 565 area. If for some reason we turn down there, the downside is down here, very similar to what Meta did. Meta did that bigger retrace right there. And didn't even retest the roadmap line from the bottom. So Watch out on Microsoft. Nothing's clear yet. Nvidia holding on to the roadmap line so far. So far, so good. We get back above the 194 area, 220, 227 upside target area. Tesla. Come on, push through. If we can get through 440. What's interesting, there's a giant gamma wall at 450. There's $100 million of options at 450. And that's premium. That's spent premium. $100 million at 450. That's a line in the sand. If we can step across that, probably going to all-time highs. The target is 550. We can't poke through that gamma wall. Can't poke through that 618. So there is a little, a little bit higher resistance here at 450, just based on the option market. Now, if we can run that off, if a lot of it can expire, which may not happen till the end of December, that frees it up to go on up higher. But right now, if we can't just jump through that, take another leg down, actually hit the roadmap line. We came up shy of that right back here. So that's something to be aware of if you're long Tesla right now. I'm acutely aware with thousands of contracts at TSLL. Hundreds, hundreds. Hundreds of shares. So Netflix still has this potential. We have the resistance right here. I've been still looking for one more downside push into the low 100 area. Doesn't have to happen. This technically was good. Absolutely beautiful correction. We hit the perfect proportions. That's why this bubble was here. We got right in the middle. Nailed it. Now, what happens next? Can we pop it? Do we drop it? A little bit further down. Nothing's clear at the moment. I do still see the case for downside pressure due to the split, but we could be done. So we have this price structure. Why do I say that? We have this price structure right here where we got one move down, one retrace, next move down, next retrace. We're holding below so far. Leaves the door open for one more push. One more push. One more push. And as long, you could almost set an alert here. If we got to close above that level right there at 109.50. If we get a daily close above that, probably not doing the downside. Come on, Bitcoin. There's a Bitcoin alert behind me there. All right, I go pull gainers. Things moving $2 more up in the pre-market. Take a look at them. MDB popping. Let's break out. We've got this downtrend of highs going. Resistance right there for MDB. If we can get above it and kick that bigger target off up there. If we can't get above that, watch out for another big prolonged retrace. We've done this once, twice. This would be 3 times, my lady. CRDO. And no opportunity. Let's go look at some pullbacks. Carvana. Ooh. As I mentioned yesterday, that's set up for 435. Come on down. Decliners. PANW. Very nice right there. PNW. Potential. We're going to have to get back up above 206. PAL. Target's still up at 160 for PAL. Palladium. VRT didn't hit the roadmap line. Wayfair never has what I need. Didn't do any kind of pullback. MSTR. Maybe that was it. That may have been the final. That may have been the finality move right there. Touched the lower bubble. 150 was basically where I was looking for. We got like 155. That may be it. This may be the sign that Bitcoin's done. That capitulation move right there. If this is a proxy for what Bitcoin's about to do, that might be done. XPO. And gosh, man, look how choppy. That finally hit the... See, it activated right back here in August. Activated the trade. There was the high. Here's the low. Activated the trade. And then chop, 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 chop. Boom, hit the target today. Right there. Or yesterday. And then pulled back pretty violently. So you take those opportunities, get out, and then you move on. SIG. See, I've been working on something for a while. Back to the roadmap line. Here's the high, here's the low. Looking for that move above 101 to get 113. AM. Look for that retrace more. BABA. Didn't hit the roadmap line. This is my support line. If you don't have this, check out the homepage. You can go to my channel homepage, check it out. I give the code away for free. If you don't have it, links in the description, $5. If you just aren't interested in putting the code in yourself, I give you the code for free. So, I mean, PPLT, still looking for that 160 target up there, 165. Short Bitcoin. If Bitcoin can turn and burn here, this is probably going to, you know, that was a 1-2 potential for this to crush right there. BKV. Yeah. Not for me. Iron probably coming on down. We are at kind of a... This could be played out right here. 74 was way over the ski tips. We could definitely see this taking a bigger retrace here. This up to the high. 5. Throw it up there. I only really expected 40. We got the next fib line up, 71. Potential we can go on up to 147, but I give that a low probability without seeing some sort of bigger pullback. Now, the big pullback could take us all the way back down here pretty violently, so be careful on IREN. Connie, 2x short Coinbase. That's probably going in the toilet. Fly-E. Yeah, garbage. Dumpster fire. Reverse splits. Don't mess with it. Stuff was set up for potential entry today on the daily chart. Remember, 150 candles would be the time frame. Let's look at the statistics on these. 21 trades, 80% of the time. It's not bad. There's the entry right there. 2344 targets. IAT. Got the high, we got the low. Here's the entry, 5568, 1283, 3. Less than 30 trades doesn't really mean anything. Right there. Fall back on the historical average, 75 and 1.2. When this doesn't have 30. When it does have more than 30, then you can rely on it. Yeah, stuff like the McDonald's right there. It comes in at 43 trades, 81% profitable, and 1.6. That's one you can count on that trends pull back and continues 81% of the time. When we have something like IAT with only 12, these numbers don't mean anything yet. You need 30. So a lot of people figure out something in the market. They've only got like 3 examples, 4 examples of it ever working. And then they try to glean something from that, like crypto winter. Just because we've done it 4 times before doesn't mean it's statistically significant that it's going to keep happening. So it could just be that we got lucky and flipped the coin 4 times in a row. And so KBE, 63.50. 21, 76. So with 21, doesn't mean anything. LAD. And you can tell me my statistics are wrong and blah, 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 whatever, but yakety schmackety. This is the way I roll. I got tens of thousands of these accumulated across all time frames. Really, it's probably hundreds of thousands at this point. The 75% and 1.2 is kind of universal. So 13, even though this one runs a little rich, doesn't mean it's going to kick off. And it's actually in the trade from back here. So if you wanted to join it, the trade's already valid back here. Look for the upside. But this might be one that fails. Stop is always a dollar below the low. So the actual entry was back here. The stop on this one, 283. LBTYA. There's the high. Here's the low. Entry, 1235. Stuff under 20. You're like, whoa, the stop here. That's 10%. Down to 9. Yeah. That's why low price stuff is a little more dangerous than the higher price stuff, but it all works the same. This one, statistics kind of bad, even though it's not 30. They're on the low side, and with 8 wins in here, this is not going to be above 75, and this is not going to fix. This one's probably not a good one to trade. MEI. Here's the high, here's the low. Entry, $9 on the upside. Again, giant dollar-wide stop, and here's your upside potential. Probably not the best one to go after. Even though it has a fairly, we're close to, we're not going to fix this with 3 trades to get to 30. So this is, the historical here is saying this is not a great one to trade. Why do I show it? Examples on what not to do, what not to wear. And the Python code picked up that high, this low, that entry. I would wait for the higher entry confirmation at 24 for 26. And this is not a great one to trade anyway. So nothing super awesome on the setups for the day. After running like some days where we had 30, 40, 60, probably gonna go through a time where we have very few kicking off for a little bit. It's just a cycle we run in the market. So looking at the market dashboard here, SFITW, be careful, this is getting right back up to the top. If we poke out at 80, probably gonna do another pullback in the market. Stocks above their 20-day moving average. S5FI, it's hanging in the middle. Haven't gotten to the bottom yet. We may still have some downside in store. But we got to get that fear and greed index off of extreme fear so we can do the final flush. And then stocks above their 200-day, still looking for upside. So we've got these two telling us, this one saying that maybe we're going to go a little bit higher. This one saying we're probably going to get a correction. And then this one saying we got more upside to go before we're done. So be careful. That's volatility, baby. Volatility. RSP. As we briefed previously, still looking for that upside target up there on 193, maybe even up to 198, and that may kick off the bigger correction that I expect in the market. So bias for the day, still looking for that upside on ES. Upside resistance 6,900. We got about 50 points to go. Could we get there today? Maybe. Don't expect big fireworks. I mean, look, last Wednesday, Thursday, yesterday, we're kind of hitting this top right around this 6,850 area. If we can get through it, probably push it on up to that 6,900, then watch out for a bigger negative reaction. So that's kind of what I'd watch there. We've hit our head once, twice, 3 times. Now we're going for the 4th time. So there you go. Yeah, I mean, Bitcoin rallying up, baby. get on through. Potentially doing the bullish thing. Minimum target coming up fast. So we'll see. Have a great day, everybody. Remember, I'll be on Market Masters 11:30 with Jack. Links in the description. And then I'll be back right here on YouTube, 5 p.m., 30 minutes of awesome. Come hang out. Bring your requests. And if you're a channel member, we got the AMA at 6 o'clock after that. Just rolls right from one stream to the other. So see you later. Have a great day. Remember, nobody's watching out for your money more than you are. So if you don't care, nobody else is going to.